All right, did you get the email I sent out with the attachments? Because I want to first start, let me share screen here with this. Okay. I want to first start with this document, a Word, actually a PDF of a Word document, sample minister's income tax return. We've been talking, the illustrations we've used throughout have talked about a minister with a salary of $70,000, of which $22,500 is housing allowance. So on his W-2, he had a $47,500 number on box 1, the $22,500 down in box 4. We'll see that in our slides in a few minutes. This particular person for 2016 had additional income from weddings, funerals, etc. of $700. He had health insurance paid by the church of $9,600. I realize that's probably a little low right now. Business mileage on his personal vehicle of 8,000 miles. He had some books and subscriptions of $750. Dry cleaning of $400. Cell phone personally used, personally owned, 65% business use, $780. Had some office supplies, $240. Some parking and tolls of $132. Meals and entertainment expense of $2,100. Out-of-pocket medical expenses of $1,650. Home mortgage interest $10,500. Real estate taxes $2,240. Contributions to the church of $7,500. I made him a tither, actually a little over. And then other contributions of $500 and non-cash contributions of $450. And he paid in estimated tax. He did $9,000 in federal taxes, $500 for the state of Georgia. He incurred actual expenses for his housing of $22,400, and the fair rental value of the furnished property plus the utilities was $23,000. Now, I omitted to discuss the scenario that this person is under. He got a W-2, but he did not have an accountable plan to have reimbursement for his expenses, and he was not exempt from Social Security or Medicare under Form 4361. So let me stop sharing that and start sharing our slides. So on the first slide, we just have the very top part of that. Reported on a W-2 without an accountable plan for reimbursement, no Form 4361 exemption. So we will see as we go through what all those other things meant as we talk through them. So on this particular gentleman's W-2, we said the $47,500 of income was in box 1, the housing allowance of $22,500 in box 14. We reported his income in Georgia because he's preaching at Anytown, Georgia, and has the same taxable state or income tax or tax wage amount for the state as he does for federal, $47,500. And you see here that he has just he and his wife, no children. So he has 2 dependents. And that's the generic part of the tax return. We see that his housing allowance, he had the $22,500 of housing allowance. He spent $22,400. That extra $100 worth adds to his $47,500. So we have on the tax return on salaries and wages a $47,600 number. His $700 of other income from weddings, funerals, etc. goes on Schedule C and flows to line 12 on the front page of the return as additional income. We didn't take any of his expenses against that Schedule C amount. Instead, we took it as unreimbursed employee business expense, and we'll see all that as we walk through the return. So the two critical things here are his $47,500 of income plus the extra 100 of housing allowance makes the $47,600 on line 7, and his other income shows up on line 12 coming from Schedule C for his other income. So a gross income of $48,300. Housing allowance is not in there except for that $100 he didn't spend. On the Schedule C, all we put was the $700. We didn't take any expenses against it. The business code for being a minister is 813000. So a lot of the software, for example, the software I use, if you do that business code, then it will treat all the expenses properly under the Deason rule and do the allocation, etc. Add back the housing allowance for self-employment, etc. If you don't, then you'll have problems on the tax return calculating everything properly. All right, this is the Deason rule. If you remember what the Deason rule is all about, he cannot deduct his expenses in full. He has to allocate them between his taxable income and non-taxable income. So that's how we're calculating all this stuff here. So his W-2 salary is $47,500. His other income from being a minister of $700. His housing allowance, parsonage or rental allowance on 4A is $22,500. They don't have a separate utility allowance, so his total allowance there is $22,500. His actual expenses were $22,400. And if you remember correctly, we've got three numbers we've got to compare. We've got to compare the housing allowance, we've got to compare the fair rental value, and we've got to compare the actual expenses. So in this case, his fair rental value was higher than the $22,500. His housing allowance was the $22,500. His actual expense he incurred was the $22,400. So we've got all three of those numbers here. On this form, the actual expenses on line 4D and the fair rental value on line 4G. So we get to get back up on that screen again. So we get to take the $22,400 as the actual expense piece as our limiting number. The difference between the $22,400 and the $22,500 of housing allowance is that $100 on 4I, and that gets added back to his W-2 income and gets added back to the $22,400 in the total column there. So his tax-free income is $22,400. His total income is $70,700. So 31.68% of his expenses will get disallowed because of the Deason rule. Here we have all his expenses. He had 8,000 miles on his vehicle. For 2016, the mileage exemption was 54 cents a mile. I was thinking it was 53.5, but for this purpose of this calculation, his 18,000 miles were worth $4,320 worth. His meals and entertainment piece, you only get to deduct 50% of those, so that's why it puts those in column B. His parking fees and tolls and his transportation cost of the $132 we picked up. His business expenses not included above $1,770. That would be his books and subscriptions pieces. That would be his cell phone use. That would be his office supplies. Those three together, let me just make sure. Yes, those three together total that business expenses not included above. He does not get to deduct dry cleaning because his uniform, quote unquote, is normal business attire or normal attire that he can wear outside of business. So we don't deduct the cost of his clothing, nor do we deduct the dry cleaning for his clothing. So his total expenses in column A, $6,222. His column B total of $2,100. He gets to deduct half of his meal and entertainment piece, so $1,050. So added to the 6222 equals the 7272 number. And we multiply that times the 31.68% that we calculated under the Deason rule on the previous slide and get that 2,304 of non-deductible expenses and take the 4,968 of deductible expenses to the 2,106. This is a copy of the 2,106. It's got the 4,968. If we added up the numbers that are there, we would come up with more than the 4,968, and that's why we've got the note here to see the clergy attachment. So the IRS will understand that we applied the Deason rule to these expenses to eliminate 31.68% of them from being counted. So we're only calculating or trying to deduct the remainder of it that are applicable to our taxable income. So on Schedule A, that 4,968 goes in the miscellaneous itemized deductions part, the very bottom section of Schedule A, itemized deductions. So he didn't have anything other than that. We lose 2% of adjusted gross income from that deduction. So his allowable deduction for itemized deduction purposes is $4,092. So the first thing we lost here was 31.68% of the expenses for the Deason rule. The next thing we lose is 2% of AGI because it's a miscellaneous itemized deduction. So we got that $8,000 and some odd dollars worth of expenses whittled down almost in half to come out with a $4,092 deduction on Schedule A. Now remember, this section of Schedule A is going away in the 2018 through 2025 tax years. Miscellaneous itemized deductions are no longer allowed as itemized deductions for those tax years. So in those tax years, if I were doing this return in 2018, we wouldn't even do this because he's not getting any deduction for those unreimbursed employee business expense, which argues from a practical standpoint, you need some kind of accountable plan so you can get reimbursed for at least some portion of your expenses and not lose those as a tax deduction. The rest of his itemized deductions, he had some out-of-pocket medical we talked about. That is limited at that point in time. It was limited to 10% of AGI. And because he was younger than age 66 or 65, I guess, at that point in time. So he did not get any medical deduction. Now remember, the church paid his medical insurance premiums. It's not income to him because he gets a W-2. So he's not having to pay that out of pocket. So that would have added for, if they didn't do that, if he paid his own, he would have had some medical deduction. If he were a self-employed individual, he would have had some medical, I'm sorry, if he got a 1099 from the church, then the medical insurance would be an income to him and he would get a deduction for that. We'll see that in one of the later examples we do. He paid in $500 in estimated tax for the state, so we get that deduction on line 5. He paid real estate taxes of $22.40. We get that deduction in full on line 6. Now remember, that goes in, well, let me talk about line 10 first. He gets $10,500 worth of home mortgage interest as a deduction in full. And both of those numbers, the $10,500 in home mortgage interest and the $22.4, also counted as additional expenses in his housing allowance. So that's that double dip we talked about. He gets to deduct them in full, but also count them against the housing allowance. So his total that we saw, well, his charitable, we didn't talk about that yet, $8,000 in cash or check and another $450 in non-cash, so $8,450, totaling a total of $25,782 in itemized deductions. Now, let's step back to a minute and talk about his self-employment income. Remember, this gentleman was not exempt from Social Security, Medicare, so he does have self-employment tax. He has his W-2 salary amount, the $47,500. He has $700 worth of profit on the Schedule C, his meetings and weddings, funerals, etc. income. He has his housing allowance of $22,500 that gets added back. So his total salary or total income for self-employment is $70,700. He does have unreimbursed employee business expense after the reduction of the meals and entertainment of $7,272. Now remember, the Deason rule does not apply here because it's housing allowance, because it's self-employment income, and the housing allowance gets added back for self-employment purposes. So we don't have to apply the Deason rule, because he has no tax-free income here that he's dealing with. So we get the full $7,272 deduction. That was all those expenses less than 50% of meals and entertainment that we don't get to deduct. So his taxable income, or his self-employment income, is $63,428. We put that on the self-employment tax form, Schedule SE, and he calculates to an $8,962 self-employment tax, and he gets to deduct half of that on the front of 1040, the $4,481. So on the front of 1040, the lower half, we see that he had $4,481 of self-employment income or self-employment tax deduction. Now, if this man had paid student loan interest or some of those sorts of things, contributed to an IRA, tuition and fees, some of those things, you see that there are opportunities to deduct those types of things as well. That's all in that adjustments to gross income section of the front of 1040. For his case, we only have that one deduction there. So his adjusted gross income is $43,819. We bring that over to the top of the second page. We subtract from that his itemized deductions of $25,782. So his adjusted income of $18,037. He gets personal exemption of $8,100, $4,050 apiece for he and his wife for 2016. So that means his taxable income is $9,937. He's in a 10% tax bracket. That tax on that is $993. In addition to the income tax of $993, he has a self-employment tax of $8,962 that we looked at. So his total tax is $9,955. He paid in the $9,000 in estimated tax, so he still owes the IRS $955. Now, while we're looking at this section of the tax return, some of the things that, well, let me go back up just a moment. For you and for Brian, for example, where you have children, you possibly can get a child tax credit, credit for child, not credit for child independent care right here. Child tax credit on line 52, $1,000 per child for children below age 17. So I believe in both your cases, y'all have 4 children that meet that qualification. So you possibly could have gotten up to $4,000 of child tax credit. That would be offset. That would offset the $993 of income tax here. The additional $3,007 would have gone down in the lower section. This additional child tax credit on line 67. So in your situation and Brian's situation, y'all would have up to $4,000 worth of credit there to benefit from. Now, talking about the new tax law that takes effect in 2018, that dollar amount doubles per child to $2,000, but the most that can be used on the additional child tax credit on line 67 is $1,400 per child. So if this were a 2018 return that had these numbers on it, he would offset the $993 from the income, the child tax credit, but dropping down to the additional child tax credit would not be the $8,000, 4 times 2,000 less than $993. It would not be that number. It would be $1,400 times 4, which is what, $5,600, not $7,007 that would show up down here on the additional child tax credit amount. So that's one of the changes you just need to be aware of for this year, that as the new tax law shows up. All right, so results. This man owed income tax of $993. He owed self-employment tax of $8,962. He owed Georgia or state income tax of $379. So that's a total, and I've got a total later on for this, but let me just, total of $10,334, which divided by the $70,700 of income he made, he paid 14.6% of his income in taxes. The big chunk of that, $8,962, was self-employment tax. That will go to his credit on his account with Social Security when he gets ready to retire. Whatever the earnings were, in this case it was $63,000 plus for the year of self-employment taxable earnings. So whatever his earnings were go to his credit at Social Security, and when he turns full retirement age, he can draw Social Security. As we pointed out, 31.68% of his business expenses were not deductible due to the Deason rule. All right, let me get that down here. All right, we're going to do a second scenario. Same dollars and situation as sample 1, except this preacher has an eldership that understands a reimbursable plan. an accountable plan, and they have given him some reimbursement possibilities. He is still paying Social Security and Medicare, is not exempt from Social Security and Medicare. Instead of a $70,000 salary, he anticipated that he would incur $7,500 worth of business expense. So they set his salary at $62,500 and gave him an accountable plan, a reimbursement plan bucket of up to $7,500. Actually, he only incurred $7,392 in business expenses, and we saw that number earlier. Did the $108 cost him? You say, well, he left money on the table. You know, he could have done something better. Well, I don't really think so, because we'll look at it. In this scenario, and I have given you the full-blown tax returns for all 4 of these samples. I'm not going to pull them up and look at them here. In this scenario, his federal income tax is $653, $340 less than the example we first looked at. His self-employment tax is $8,930, $32 less than what we looked at. His Georgia income tax would drop by $177 to $202. And remember, his foregone expenses were $108. So the reimbursable amount that he was allowed to use, the $7,500, even though he didn't spend all of it, because he had less income, his income tax amounts dropped by over $500, even though he left $108 on the table. So I don't think he was hurting because he didn't properly estimate all his expenses. The Deason rule here does not apply when he goes, because he has no unreimbursed employee business expense. So if there are no business expenses that we're taking against his income, then the Deason rule does not apply. So that's part of the reason that he dropped his income so much, as well as part of the reason that his self-employment tax dropped some. All right, the third example. Same dollar, same situation, except this person has filed and been approved on Form 4361 for exemption from Social Security and Medicare. So we're not going to have the self-employment tax calculation, but he also, when he reaches full retirement age, is not going to be able to draw Social Security due to his ministerial income. If he had a W-2 job elsewhere, or if he only worked part-time and worked as a minister and worked part-time somewhere else, he can draw Social Security based on that. But he cannot draw based on his ministerial income having been paid into Social Security. So he needs to make sure that he pays into some retirement plan, or the churches assist him by paying something into a retirement plan, because he will not have access to Social Security for his ministerial earnings. In this case, he gets a federal income tax of $1,453. That is $460 more than he paid in sample 1. The primary driver there being he doesn't have self-employment tax, so he doesn't get that $4,000 deduction on the front of 1040. So he has to pay additional tax because of that. His Georgia income tax went up to $655, an increase of $276. But the only tax he paid was these 2 amounts, the $1,453 of federal income tax, the $655 of Georgia income tax, so $2,108 in tax. That $2,108 divided by his $70,700 of income, 2.98% of his income got paid out in taxes, income taxes. This particular gentleman, because he is paid on a W-2, because he does have unreimbursed employee business expense, the Deason rule still applies. So 31.68% of his business expenses were not deductible due to the Deason rule. The fourth scenario we're going to talk about, same dollars as sample one, the $70,000 of income, the $700 from other weddings, funeral, meetings, etc. Except here he gets paid on a 1099. Now, in this scenario, if you are paid on a 1099 and the church pays your health insurance, that becomes taxable income to you. And I should have deleted out that discussed in section number 255B on Monday at 10:30. I apologize for not having deleted that. That was something that I did for the PTP so they could reference those particular session numbers. But his health insurance premiums are income to him. That $9,800 or $9,600, I'm sorry, becomes additional income to him. So in that situation, his $70,700 of income on his 1099 plus his $9,600 worth of income from his health insurance plus his $700 of meetings and funerals, etc., are his total income. I will open that example because I want us to look at something here. Let me stop share here and share screen here. All right. This gentleman, as you see on the first part of the tax return, he has the $100 of excess allowance. Excuse me. The housing allowance where he had a 22.5 number but only 22.4 was spent, that $100 still goes on line 7. All the rest of his income and his expenses go on Schedule C. So let's flip down to Schedule C and look at that. He had 57.8, which was his 47.5 of income, plus his $700, plus his $9,600 of health insurance. So let me make sure that 47,500 plus 700 plus 9,600, $57,800. That's where his income came from. He had his mileage expense that we talked about here, the $4,320. He had his office expenses. He had half of his meals and entertainment. And then he had his other expenses here, his books and subscriptions, his telephone, his parking and tolls of $132. So all that nets out to $5,543. And then we say, see clergy attachment. So on the clergy attachment, remember okay, let's get to right here. We've got to go through the very same issues here. His gross income, line 1, he didn't get a W-2, he got a 1099, so everything goes on line 2 as gross income. His 22.5 versus his 22.4 of housing allowance. So that gets added back, his total income of $80,300, which is $9,600 more than the W-2 minister because of his medical premiums that got treated as income to him. So 27.9% of his expenses don't get deducted. And this is where we added up all his 7272 of expenses, and he doesn't get to deduct due to the Deason rules. So we get the 5243 number that we put up here on Schedule C as his deduction. Right there. So the 5243 is subject to still to the Deason rule. So 52,557 was his self-employment income. We saw that number on the front of 1040. And because he's still subject to Social Security and Medicare, that's the same number that will go over here to self-employment, except we get to add back the housing allowance, and we get to deduct in full what we didn't deduct under the Deason rule. So we've got a calculation here of his self-employment income, just like we did on the other minister. Should be this next right here. Yeah, the 52,557 off Schedule C, we add back his housing allowance amount. We add back the non-deductible under the Deason rule expenses. So we get a 65,756 self-employment number that he calculates over here as self-employment tax on Form SE. So 9,291 of self-employment tax, deducting 4,646 of that. So on the front of the 1040, we have his 4646 deduction. We take a deduction for the self-employed health insurance. It got added to him as income, but he gets to deduct it here because he paid income tax on it. He's getting to deduct it here. So his net income or adjusted gross income of 38,411. He had 26,165 in itemized deductions, different than the other guy that had the W-2 because of the lesser deduction on the Deason rule or lesser exclusion on the Deason rule. So 8,100 of personal exemption, so taxable income of 4,146. That's the 413 in tax, the 9291 of self-employment tax, totaling 9,704. He had paid in 9,000 and estimated, so he still owes $704. Okay. So let's stop the share there and get back over here to, nope, not that one, this one. Okay. This is a comparison of the four returns. As you can see, the schedule, the guy that got the 1099 had more income, quote unquote, and paid more overall in tax than the guy that got a W-2. Obviously, the best scenario to pay the least in tax is to have a deductible, a reimbursable plan, an accountable plan where you can get reimbursed for expenses. So in that case, you're going to pay the least amount of tax. And if you have are exempt from Social Security or Medicare, then you're going to also pay just income tax, not self-employment tax. But if you do that, you need to make sure that you or the church or some combination of the two pays into some sort of retirement plan so that you can have something to draw upon when you do retire. If you pay into Social Security, as we said, at full retirement age, whatever that works out for your date of birth, you'll be able to draw based on your ministerial earnings from Social Security. So let's see if there's, okay, that's it. And I got through that a lot faster than I thought I would. Questions?
No, sir.
Okay, well, I did this to try to draw everything together that we've been talking about over the last 8 weeks. You know, we talked about, are you an employee or are you self-employed? We talked about the Deason rule. We talked about expenses and accountable plans. We talked about Social Security and exempting out of it. So really all of that flows into the tax return. And you see, I think, how some of those issues affect that return. So, like I said, I've sent you all 4 of those full tax returns. If you want to look through any of them, if you have any questions, I'll be glad to address those either outside of class or as we open the discussion next week. Don't have my form, my schedule right in front of me. But okay, next week we're going to talk about IRS audit considerations. And I think that's pretty much everything. Yeah, that's going to be everything we'll talk about. So there'll be some interesting statistics there that we'll talk about. And I will remind you that come March the 8th, you are due a paper to turn in on whether you would or would not choose to or arguments for or against exempting out of self-employment tax. So, I'm sorry, exempting out of Social Security Medicare. So that is due on the 8th. And if there are no questions, no final comments, then I will stop the recording and we will look forward to talking to you next week. Okay?
All right. Thank you, sir.
All right, Justin. Appreciate it.